Stocks stage a strong comeback after the sell-off late last week. Realty and energy are the big gainers while healthcare stocks drag. Kotak Mahindra Bank sees margins crimp a little more than peers even as the management is hopeful of them improving going forward. Most analysts remain positive, but concerns over valuations remain. The Supreme Court allows a review of the AGR matter, saying it sees no reason to not allow the centre to reconsider the policy issue. The Apex Court's landmark observation allows the government to offer relief on AGR dues to Vodafone Idea. There's a strong second quarter for SBI Life Insurance with margins beating street expectations on a better product mix. Growth in the second half of the year is also expected to be stronger. The stock perks up. An eyewear player, Lenskart Solutions, plans an 7,000 crore plus IPO, which is priced at 10 times sales and 230 times its earnings. The management counters, highlighting a long growth runway in India and overseas. Good afternoon, Yobitas here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormuz Fatakia, and on the penultimate day of the October series expiry, the indices are continuing from where they left off last week, barring a minor blip in the last 1.5 days of the trading session, the second half of Thursday and of course on Friday. But today the index did manage to cross that 26,000 mark intraday, still continuing to hover around those levels, 175 points higher on the index. The banking names doing well for themselves despite the drag coming in from Kotak Bank. The Nifty Bank now currently trading 400 points higher, back above the mark of 58,000 as well. And the broader markets too. Of course, we are heading into a very busy earnings day. We've come out with a couple of names just before the show began, starting off with Chennai Petro. That stock is up 7% after its results. The profit coming in for the quarter compared to a net loss in the previous one. So 6.5% higher for Chennai Petro. And Hatsun Agro, that stock came out with results a few minutes ago, and that stock too has seen a very, very sharp surge after its results, after an improvement that was seen in its profitability. And Hatsun Agro, the other earnings reaction, the stock up almost 20% as we speak. So as of now, the market's doing fairly well for themselves, and a lot of other earnings lined up, be it Indian Oil Corporation, be it Indus Towers, and of course Sona BLW, Mazagon Dock Shipbuilders. So a lot of earnings that are lined up going into the second half of the trading session. Of course, Indus Towers is also up because of the news related to Vodafone Idea, and that's our top story for the start of this show. And this is after the Supreme Court allowed a review of the AGR matter, saying that it sees no reason not to allow the centre to reconsider the policy issue. Ashmit is joining in with more details on this. Ashmit.
Indeed, a huge relief coming in. Vodafone Idea, of course, was here before the Apex Court asking for relief. They were asking for waiver of the penalty interest and the interest on penalty dues. There have been 4 adjournments sought by the centre. The centre kept asking for more time, saying that they're going back to the drawing board, coming out with a solution. Today, when the hearing began, they've not given a definitive structure of what the relief package will be like, but what they had sought for, essentially saying that allow us the flexibility to go ahead and to structure some form of resolution as far as this AGR issue is concerned. Now, the Apex Court taking note of 3 critical arguments. Number one, the facts on the ground have changed. Now, the government enjoys a 49% equity stake. In fact, at one point, the Solicitor General also remarked that by way of the government holding stake, it's also a case of public interest being at play. The second, the Solicitor General pointed out that, look, there are as many as 20 crore customers as far as Vodafone Idea is concerned. All of them will stand to get impacted. And finally, also saying that if the company goes away outside of the customers, competition in the sector will also get impacted. Now, on account of all of these factors, the Supreme Court saying that, look, this is a policy matter. The Supreme Court does not want to intervene, does not want to guide the hand of the centre. It does not want to prevent the centre from taking any measures for resolving this issue, and saying that given the peculiar facts and circumstances of this case, 49% stake, 20 crore customers at play. All of that factors coming into play. The Apex Court now allowing a free hand to the centre, saying that this is a policy matter. We don't want to come into the picture. The centre is now free. The DOT is now free to formulate, to restructure some form of solution as far as the AGR issue is concerned. The one question, of course, that many have left asking is that with this Supreme Court direction, will it be applicable to Bharti as well? That's a question that now the DOT, we understand, will have to give clarity on whether this relief package that the Supreme Court has granted blessings to will be pointed towards only one company or towards the wider sector. Back to you.
Indeed, that's the bigger question to watch out for. Ashmit, thank you for that. And staying with Vodafone Idea, Reema is now joining in to tell us what options does the government have with regards to giving any potential relief to Vodafone Idea. Reema.
Well, multiple options that we can think of right now. For starters, they could extend the timeline for Vodafone Idea to repay the AGR dues. As of now, it comes to an end in March of 2031. They say that you have an additional 20 years to repay those. Secondly, maybe they say that just repay the principal. Don't pay the interest or the penalty or the interest on penalty, or pay part of that. And thirdly, the company has been, or the telcos have been arguing that there are mathematical, arithmetical errors. So maybe the government decides to rectify that. So we'll have to see what form and shape the relief and resolution takes place. But there are multiple options on the table. But this could be a game changer for Vodafone Idea, because for starters, it will ease the cash flow burden, and two, it will help the company maybe go ahead and raise that much needed 25,000 crore of bank funding, which up until now banks were unwilling to lend to Vodafone Idea because of lack of clarity on what its prospects are going to be. But the stock also to watch will be Industars, because once Vodafone Idea is in a better shape financially, it can resume its capex, which is positive for Industars, and maybe it will help Industars once again resume the dividend payouts, which investors have been waiting for. Back to you.
Indeed, but Vodafone Idea stock has cooled off very sharply from the highs of the day. The intraday high was 10.57, and since then the stock is now only 1.5% higher. At one point was up even almost 10%. Was Vodafone Idea. So a sharp cool off from the highs of the day. But Reema, stay on, because Reliance Industries is the other one that is in focus, and that has now formed a JV with Meta as it is betting big on AI. Tell us more on that.
Indeed. So Reliance Industries has launched Reliance Enterprise Intelligence Limited, REIL, which is a joint venture with Meta. Reliance will hold a 70% stake. Meta will have a 30% stake. And the initial upfront committed capex is about $97 billion. This ties in with what Mukesh Ambani had to say at the AGM, where he spoke about AI everywhere, AI for everyone. So once again, it goes back to the push that Mukesh Ambani had highlighted about the broader AI push. But according to Morgan Stanley, that the $97 million is only the upfront capex. Eventually, the company will be making further investments. They estimate it to be between $12 to $15 billion to build their 1 gigawatt AI data center infrastructure. And the question is, because global tech majors who are in the AI play are commanding such high valuations, once this REIL scales up, what could be the valuations it will command? And I think, and will that have a rub-off on the listed entity, Reliance Industry? We'll have to see how that plays out. Back to you.
Playing off well as of now, 2% higher on the stock, and nearing 1,500 is Reliance Industries among the top contributors to the Nifty gains in today's session. Moving on then, the Reserve Bank of India has announced draft rules for allowing banks to finance acquisitions. Ritu is joining in with more details on this. Ritu.
The Reserve Bank of India has finally put out draft rules on capital markets and acquisition financing for banks, setting clear limits and safeguards. So a bank's total exposure to capital markets, both direct and indirect, is going to be capped at 40% of the Tier 1 capital. Within that, the direct exposure, which includes investments and acquisition finance, cannot exceed 20%. And specifically, acquisition finance is going to be capped at 10% of the Tier 1 capital. Now, on M&A financing, for the first time, RBI is allowing banks to lend to Indian companies that want to buy stakes in other companies in India or abroad. But RBI says these deals must be strategic and aimed at long-term growth and not short-term profits. To qualify, the acquiring company also has to be listed, have a positive net worth, and must have been profitable for the last 3 years. Also, banks can only fund up to 70% of the deal value, while the remaining 30% has to come from the company's own equity. After the acquisition, RBI says the debt-to-equity ratio cannot exceed 3:1 and the loan must be fully backed by shares of the target company as security. Next, let's also talk about lending to capital market intermediaries. Banks can lend to them only if the loan is fully secured and the collateral actually belongs to the borrower, and there is a restriction where banks can't finance them for proprietary trading or investments of their own. Now, when it comes to IPO, FPO and ESOP financing, banks can lend up to 25 lakh rupees per person, but covering only 75% of the subscription value. Finally, loans against securities for individuals. Banks can lend up to rupees 1 crore per person. Within that, 25 lakh rupees can be used for buying shares in the secondary market. Now, while bankers we've been speaking to have welcomed the move overall, called it a good start, not all their requests have been addressed. So they will seek clarifications, for instance, whether banks can finance foreign companies looking to buy in India, not just Indian companies making acquisitions. Also, the clause on acquiring company being a listed entity, the profitability and the 3:1 debt to equity cap after acquisition has also raised some concerns among bankers, especially for deals that involved distressed assets. Public comments on this draft are invited by the 21st of November, and the final rules are expected to kick in from 1st of April next year.
Ritu, thank you for that update. We also spoke to a whole host of experts on the likely impact of these norms on the banking sector. Listen to what they had to say.
It is definitely a segment which for many years has been close to Indian banks. And to a large extent, most of the M&As were getting funded from FPI or NBFC or AIFs. To that extent, it's clearly an area of opportunity for Indian banks to sort of step in. Having said that, as you rightly said, there are boundary conditions like debt equity ratio of 70-30. Similarly, the acquiring company has to be a listed entity. So there are boundary conditions, and also it eats into the CME exposure of banks, which is not a big headroom that banks have. A lot of banks have, CME exposure is sort of not that much headroom is available. To that extent, it is a new area and it's an opportunity for Indian banks.
I think this is a good start. I don't believe this is any inflection point. This is just testing the waters, I would believe. I think I would believe that the banks have learned a lot over the last 10 years in terms of the cycle they've gone through. Banks have been a lot more risk averse than what possibly even the regulators anticipate. That's why you see corporate lending, in spite of the cycle having fully played out, I don't see much pickup in corporate credit. So the thing is that banks will be tipping their toes, not jumping in. I would think it's a good starting point, but banks will be cautious. Banks will take their time in terms of trying to build their own risk management capabilities as far as these are concerned. The last thing they would want is to repeat of the previous cycle, and therefore I believe that it'll be a slow turn up.
And you just heard from Zareen Daruwala on this subject, and news just coming in that she has been appointed Group CEO at PL Capital to spearhead their growth going forward. But Ritu, since you are still with us, let's also talk about ICICI Bank. Sandeep Bakshi's term as CEO is up for renewal in about a year's time. But is he going to continue after the current term?
Well, there's growing buzz around ICICI Bank and its CEO Sandeep Bakshi, whose term is up for renewal in about a year. And the big question that everyone's asking is, whether the man that turned ICICI Bank around stay on for another term. Now, that question actually came up during the bank's recent earnings call, where an analyst from Bank of America Securities asked Sandeep Bakshi directly about his intention to continue. The response came from the group CFO, Anindya Banerjee, who said there is still time and the board will take a call and make a disclosure at the appropriate time. Now, analysts say it really depends on Sandeep Bakshi himself whether he wants to continue or not. For instance, Suresh Ganapathy at Macquarie Capital notes that while personal factors could be at play, the board seems fully supportive of him staying on for another 3 years after his current term ends in October 2026. Now, under RBI rules, private bank CEOs can serve up to 15 years or until they turn 70 years of age, and Sandeep Bakshi at 65 years is well within that limit. Now, since taking charge after Chanda Kochar's exit, Sandeep Bakshi has led a remarkable turnaround for the bank, and investors have also rewarded that. For instance, ICICI Bank trades at 3 times its expected FY26 book value, higher than HDFC Bank's 2.7 times. So if Sandeep Bakshi decides to move on, Macquarie points out to Rakesh Shah, a long-time ICICI Bank executive, as a possible successor. Now, in response to our query on the matter, an ICICI Bank spokesperson said that the board will take a decision on the matter at the appropriate time.
Ritu, thank you for that update. The other drag that's coming in on the banking stocks today is Kotak Mahindra Bank, and that's after its second quarter results. Gaurav is joining in with more specifics in the big story on how private banks have performed in this quarter. Gaurav.
Well, yes, when we look at private bank, the top 5 private banks, they have reported their numbers. And let's go back in time and let's see how they are reported. When we look at Kotak Mahindra Bank, the loan growth remains strongest across the pack at around 16% growth. But at the same time, we also saw some banks like HDFC who surprised with the loan book growth at around 10%, which actually is merging with the system level growth. Apart from that, Axis Bank, they also reported very strong set of numbers. In fact, double-digit growth after 3 quarters of single-digit growth. When it comes to ICICI Bank, the growth remained in double digits, but a little bit lower than its own trajectory. And at the same time, Indices Bank, they reported around 8 to 9% decline in terms of advances. When it comes to deposits, we did not see any kind of negative surprise there. In fact, for HDFC Bank, we saw deposit growth on a sequential basis was higher, and that is the reason why LDR ratio was one of the things that increased. Apart from that, when we talk about CASA, now here as well, Kotak Mahindra Bank is actually leading the pack, at least in this quarter, because 140 basis point of increase in CASA ratio is what we saw sequentially. Apart from that, if you look at ICICI Bank, they also did manage their CASA very well. HDFC Bank remained flat on a sequential basis, while Indices Bank and Axis Bank both saw some decline. Now, coming to the net interest margins part, when we look at net interest margins, when we look at ICICI Bank, they have delivered very great set of numbers. In fact, just 4 basis point of fall. And after that, we also saw surprise coming up from Axis Bank, where we saw just 7 basis point of fall in terms of net interest margins. We saw HDFC Bank, who reported good set of numbers. We saw 8 basis point of fall there. But apart from that, Indices Bank also reported inline set of number. What was negative is that the Kotak Mahindra Bank, not negative though, but a bit higher than the expected fall of around 11 basis point. Now, when it comes to asset quality as well, we saw good set of numbers, but all in all, across the parameters, we saw ICICI Bank actually still leading the pack. Apart from that, HDFC Bank and Axis Bank doing great job. Kotak Mahindra Bank saw a bit of a dip, and the reason being that valuations are high. And lastly, Indices Bank, decline in loan book growth. That is what we saw in second quarter so far.
Indeed, interesting analysis there. Gaurav, thank you for that update. Take a short break. More news continues on the other side. Stay tuned. Welcome back. Now, the big global cue this week will be US President Donald Trump's meeting with Chinese President Xi Jinping, ahead of which US Treasury Secretary Scott Bessent stated that Donald Trump's threat of an additional 100% tariff on Chinese goods is effectively off the table, hinting at a trade deal that may take place soon. Listen to what he had to say.
This was the 5th meeting that I've had with my Chinese counterpart, the Vice Premier, Hu Lifeng, and we covered a wide range of issues, and I think we've reached a substantial framework for the 2 leaders who will meet in Korea next Thursday. So, on the table, the president had given me maximum leverage when he threatened 100% tariffs if the Chinese imposed their rare earth global export controls. So I think we have averted that, so that the tariffs will be averted. And we have a regular quarterly meeting with the Chinese. It was scheduled for November 10th or before November 10th. I don't think we will have to have that. So we have been rolling the tariffs quarterly. So we agreed on that. We also agreed on substantial agriculture purchases for U.S. farmers. We agreed that the Chinese would begin to help us with the precursor chemicals for this terrible fentanyl epidemic that's ravaging our country. So I would say that it was a very good meeting overall.
has also signed a flurry of deals on trade and critical minerals with Thailand, Malaysia, Cambodia and Vietnam at the 47th ASEAN Summit. CNBC's JP Ong gets us the details.
A lot of highlights in just about 36 hours since the ASEAN Summit officially kicked off, and a lot of this really being driven by the presence of U.S. President Donald Trump, who is, as you mentioned, on his way or is about to land in Tokyo, actually, for the next leg of his Asia deal. As we know, this was probably one of the more important or more substantial ASEAN summits we've had in years, actually, also because it seems that that framework or that groundwork that was laid to try and pave the way for a potential meeting between Trump and Chinese President Xi Jinping was laid out here in Kuala Lumpur on the sidelines of the ASEAN Summit. And also because they did ink a number of trade deals, as you mentioned, with 4 ASEAN countries, the likes of Cambodia and Vietnam, saw their trade deals finalized. Thailand, seeing a framework that has been laid out that will mean that they were this close or very close to actually finalizing that trade deal that will see them getting a tariff of about 19%. Arguably the most important or the most interesting one was the one that the U.S. signed with Malaysia, not just because Malaysia is the host of the ASEAN, holds the chairmanship of ASEAN this year, but also because there were key elements, there were key components in that particular agreement that involved rare earths, establishing a pipeline of rare earths between Malaysia and the United States. According to Malaysia, they did some initial studies and said that there are indicative potential resources or rare earth resources that could be as much as 16 million metric tons if this is indeed verified, which means there's a huge opportunity for Malaysia to actually court some of these investments and also take a bigger role in the rare earth industry. And so far, they have actually cemented at least an agreement to potentially supply these to the United States. But keep in mind, Malaysia is also talking with the Chinese to possibly bring in rare earth investments into Malaysia. So again, this puts them in a very interesting position because there's a lot of opportunity for them in the rare earth space, but also a lot of steps and a lot of miles they have to travel, and also a lot of relations that will have to be maintained between the United States and China, who are competing in this very, very critical sector.
JP Ong, thank you for that update. Numbers from Supreme Industries at the bottom of your screens. Margins have narrowed close to around 170 basis points, 12.5% from 14% last year. There has been a marginal increase in the top line. On the profitability front, well, the profits have come down as well. 207 crores in the base quarter, 165 crores this time around. It's a 20% drop in its net profit. The stock currently remaining flat. All eyes on the company's guidance. Take a short break. More news and updates on the other side. Welcome back. Chief Justice of India Bhushan Gawai is set to appoint his successor by recommending Justice Surya Kant, the senior-most judge of the Supreme Court, to the Union government. Justice Kant, who is next in line for the role based on seniority, will be eligible to assume office upon Justice Gawai's retirement on the 23rd of November. Once notified by the government, he will become the 53rd Chief Justice of India and is expected to serve until his retirement on the 9th of February 2027. That will be a tenure of around 14 months. With that, we call time on this edition of Business Lunch. From me and the team, thank you for watching. Midcap Radar on the other side.